Hello everyone, hope you are doing good. Better late than never. I know it's been a long time, but it's a good time because in this video I have come up with a very good swing trading strategy for you. In this video, I'm going to take two different stocks which have given a very good technical breakout and I'm going to compare them both and finally propose my ideology behind which one I would choose and which one I would not, so that you can probably better understand the concept of swing trading. And many people might have suggested the technical breakout strategy or taught you the same, but this video is going to be different. Watch it till the end because I'm going to not only talk about the technical breakouts, but I'm going to combine it with the fundamentals as well as the valuation, as well as quarterly yearly results and also the growth prospects to make it a more probable winning strategy. Stay tuned. So, the very first stock I'm going to take as an example and talk about is Zidus Life Sciences. If you see Zidus Life Sciences, this stock has been in downtrend for a longer period of time, okay, and it has given a trend breakout, the range breakout as well. So it's been following a range of zigzag, and that range has been broken out as well. That is point number two. And thirdly, it has given a triangular pattern breakout. That is a point number three. And also, it has given the 50-day EMA breakout, point number four. So there is a strong breakout given over here. I have also marked it with a blue line to see the trend reversal over here because it's been in a bearish trend for a longer time and now it has started to move up. So when this happens, there are two probabilities possible. One, the stock would go high and touch the all-time high of 1300, or the stock might go down, right? So in this case, what is the higher probability? That's what one has to see. So we have seen a lot of breakouts as I have spoken now. The trend reversal, the EMA, the triangular breakout. But is that enough? Because normally people see these kind of breakouts, the technical charts, and take an entry. But is that enough? Um, in my knowledge, it is not, because the swing trading is all about probabilities. So instead of looking at the technical chart and considering only the technical breakouts, I would also reconfirm it by looking at the other parameters from the stock fundamentals. So along with the technicals, I would also look at the probability by analyzing the fundamentals of the stock. So if I go to the fundamentals, Zydus Life Sciences is a Nifty 100 company. It's a well-known pharma company. So obviously it's a checklist ticked that it's a very good basic company. Okay, and its market cap is almost equal to 1 lakh crore, which is also a good sign. Now, coming to the price, the company is trading at a book value of 238, intrinsic value of 693, and the current price is 975. So, the current price is not even double of the intrinsic value. It means the company is still trading at a decent valuation. It's not too high. And what I also see is if you look at the stock PE, the PE is 21. Compare it with the industry PE, which is 33. So there is still a lot of scope for this stock to grow. Okay. So fundamentally, the stock has got a very good potential to grow. We can also even look at the other parameters like the result or the growth. So if you see the last 3 quarters, the company has shown a significant growth in sales as well as the profit. So the profit has gone up from 920 till 1200. It's a decent profit compared to the year on year as well as quarter on quarter. And also, if you go to the profit and loss, uh, and if you look at the yearly profit also, the profit is 4600, which is an all time high. So it means the company is growing at a very steady profit and sales growth, and also it is having a very good fundamentals as well as a valuation. So technical is strong, technical breakout is strong, fundamental also pretty good. So when you analyze both and kind of come to a conclusion that it is kind of ticking all the boxes, then probably you would consider this as a very good stock for a swing trading. Is it still 100% probability that this stock is gonna hit an all-time high? May not be, because it could be fundamentally strong, it could be technically a strong breakout, but immediately hitting the high would be based on the trend of the market, because mostly swing trading, one has to do it in a bull run or a bull market, so that it reaches the target very faster or very sooner. If in case you take an entry, unfortunately the bear market starts, then obviously the stock might go down, right? So there are two things to consider here. So number one, I've taken an entry in this stock. Okay, if it is a bull market, obviously it's gonna hit the target maybe in 1 or 2 months, right? Let's assume that. But what if it's a bear market? The stock goes down, but there is still a chance that it might still climb up, because fundamentally the stock is good. There are very good valuations. It has to reach that high at some point of time. So instead of 1 to 2 months, probably it might take 3 to 4 months. It might go down for 1 or 2 months, but still it might come back and hit the all-time high, right? So that is how one has to choose a stock. Either I'll hold it for 1 to 2 months. In a worst case scenario, I'll hold it for 3 to 4 months or even more. Uh, I wanna ensure the scenario that it doesn't, you know, result in a loss, right? Regardless of I hold it for a couple of months or even more. So that matters. So that is how one has to choose the stock. So in that note, for example, in this Zidus Life Sciences, I see a kind of 80 to 90% probability that the stock might climb up based on the technicals as well as the fundamentals. In a very rarest of rare scenarios, like if it's a bear run or if it's a crash, the stock might go down. But still, uh, it has to bottom out, but it has to come up because the company is good, the fundamentals are good. I just need to wait for some more time. So it means the risk is less. Rather, I invest in a micro cap or a very small cap, which is very less known, and I invest purely based on just a breakout. Then obviously, the stock might go down and might not turn back, right? So obviously, I'm at a loss. Rather, I would choose a safe stock like a Zidus, where even if it goes down, at some point of time, it might come back. So that is point number one. Secondly, if I want to don't wait for much of a time, take a stop loss. It's always advised to take a stop loss, because there is no harm in putting a stop loss while you are giving an entry. So, for example, if you take this chart, this baseline, this particular line is a very strong support, because the stock has hit this point so many times and has climbed up. So it has kind of broken out from this particular area. So if you see this particular candle, this is a strong green candle. So let's say if someone is taking an entry at 950 rupees, probably you can put a stop loss at 920 or a 910 or a 900. So in a worst case, it would hit that stop loss, and you might get out of that stock with a very less loss, right? But in a good case, it might climb up and hit the higher target. So that is the fundamental one has to analyze when you are choosing a stock for swing trading, right? Now, I will also talk about another example where the technical breakout is good, but still I won't choose that stock. Let's see why. So the second example I'm going to talk about is the company called Camel. So we all know Camel, it's a very good stationaries company in India. So it's a very reputed, well-known company as well. We all know that. So if you see this chart of this company, it has given a good breakout. So it has given a breakout from a strong support level, that is this range. Along with that, it has also broken the what do you say, the 50-day SMA, and it is also showing the uptrend. So it has completed the consolidation and it has started showing the uptrend from here. So now this seems to be a good technical breakout, and the targets could be 170, this range, or the all-time high of 220, which seems to be a very good percentage of hike. But is that enough to take an entry in the stock? No. Let's also see the fundamentals. So if I come back to the fundamentals and numbers, Camlin, as we all know, it's a very good company, no doubt about it. But you see the market cap, it's a small cap company. And also see the current price. The price is trading at 124, and the book value is 30 and intrinsic is 11. So the stock is trading at, like, the what do you say, like 4 times higher than the book value, as well as 11 times higher than the intrinsic value. So it means it's very much overvalued. I can also confirm it with, by seeing the stock PE. The PE is at 230. The number itself is very high, but if you compare as well with the industry PE, its industry PE is very less, 47, which again reconfirms that the PE is very very high and the stock is very overvalued. Um, Now let's look at the results. Results means nothing but the growth. The quarterly result is not so great because it has just given a 4.5 crores of profit, and the annual result again it has given a 6 crore profit, which is very lesser than the last 2 years. So the check box not ticked are the growth aspect as well as the valuation aspect. Only the brand is good, the the company is good. At the same time, the technical breakout is good. So in this case, if I have to tell the probability is 40 to 50% that the stock might climb up and hit the all-time high. The reason is, once people see the valuation like 200 and all, they might not keep continue buying to take the stock up to this level, right? After some point, they might get panic and they might feel it's overvalued and they might start selling it. So the chances of this stock hitting the high could be could be very lesser, even though the breakout is good. So that is why I won't kind of choose this, because the company is good, the fundamentals might be good, the technical breakout might be good, but the valuation is very high and the growth prospect is a bit lesser. So if I take the probability, it's a 40 to 50% probability for me, comparing with Zidus Life Science, where it's a 80 to 90% probability for me. So in a lakhs of company around, right, and you might hardly invest in one or two. So why to take a risk, and just go with a technical breakout amongst the number of companies? Then you can just go with a very good company which has got the higher probability. So in order to make you understand the difference, so that's why I've shown these two examples. So given a chance, where the analysts are suggesting, these two particular stocks as a good technical breakout for swing trading, I would keep Zidus license as my first option and Camlin as my second option. Rather, I would not choose Camlin and I would probably go with Zidus. So that is how I would choose the swing trading stock. So it's always good not only to consider the technical breakout, rather you should consider both technical as well as fundamental, so that the risk is very less. Hope you get the difference.